So this is welcome news for those crippling under the cost of fuel at the moment. The EV tax break is set to roll on, given the current circumstances. That's what the government said. They were considering changing them at the end of the financial year, sort of winding them back a little bit, but it looks like they're going to roll on without too much change. So if you're thinking of switching to an EV, then this could be a welcome development to you if you're not going to be able to do it before the end of the financial year, that is. And the way that basically works, and this is under the premise that most of these arrangements are under the statutory method for fringe benefits tax. So look that up if you want. There is a different method, but if you don't want to keep a logbook and you're using the car most of the year for personal use anyway, so it's not a tool of trade, you're not really using it for work, you're driving into and out of work, you just happen to buy that car, set it up as a novated lease through your business, through the company you work for, or your business, if you're self-employed, you can set it up. Doesn't necessarily have to be a novated lease, but that's the most common. But the way it basically works is if you own just a normal, a non-EV, then basically you the fringe benefit to you is assessed at, the government looks at it and goes, say you got a $50,000 car. The benefit to you is 20% of that value every year. So we're going to say you're getting a $10,000 benefit on that car. Now that's sort of seen as a taxable income under the fringe benefits tax rules because it's a fringe benefit, not core to your income, but that car is giving you a $10,000 a year benefit. That's the way they look at it. And we're going to dock that $10,000 a year benefit at the fringe benefits tax rate, which is 47%. So we're going to take $4,700 in tax for you getting that benefit of that car each year. Now you can circumvent that by making a $10,000 a year contribution to sort of equal that out, right? But that's after tax money that you're putting in. So you may have been paying a fairly high tax rate on that anyway. So there's no real tax benefit on that. There is a tax benefit on the fact that a lot of the inputs into that vehicle are being tax deducted. So that might, even it out for you. So that's for a non-EV. But with EVs, you still get to claim all those inputs on tax, but you don't pay that $4,700 tax or that 47% tax rate. You don't have to make the contribution either. It's just non-accessible for FBT, which is great. So that's the benefit there. Other benefits, of course, with electric cars, you don't have to pay for fuel, which is a massive expense. You can charge it at home each night. There's definitely a lot less servicing. Sure, you have to still change tyres and wiper blades and stuff like that, but no oil changes, generally no service schedule. It's generally as needed. So it's a lot of savings there. Yeah, there's some negatives as well. A little bit of range anxiety. They just don't go as far as a full diesel car and with a massive tank, of course. Probably not going to take it caravanning. Maybe a little bit more depreciation on certain models, but certain models is sort of equals out at a certain level. So definitely worth the food for thought. Drop a comment if you want to know a little bit more. It doesn't suit everyone, but it can definitely be a great little solution for people who are really concerned about the cost of fuel, that's for sure.